Hello, everyone. My name's Kyle Camerlinck here with Taiter Realty in Jupiter. I'm the broker owner of the firm here. And today I want to talk about how the K-shaped economy is showing up in real estate. So I'm sure a lot of you guys have heard economists talking about this K-shaped economy, this K-shaped recovery that we're currently going through in the nation. And I just want to highlight what it looks like from a real estate perspective. To highlight, there's two different markets kind of going on. We got the upper side of the K, which is the wealthier asset owning group, and then we have the bottom side of the K, which is people that have median priced housing, and it's just like the standard home right around in Jupiter, which is usually around $1 million for a single family home, and then homes that are anything underneath that, those tend to be struggling a little bit more than the upper side of the K, the ultra luxury, those over $3 to $5 million. So for those that are unfamiliar with what the K-shaped economy is, so as I was saying, you have the upper side of the K, which you'll see right here, and then the lower side of the K. So that's where it kind of gets its name. The upper side of the K is asset owners, cash buyers, high income households, scarce real estate owners. And then the bottom half is like wage owners, first time buyers, entry level buyers. And the best way to describe it and why this happened is right now with inflation at all time highs and still working to get it under control. Prices have obviously gone up, and a lot of us have seen that in the grocery store, especially now at the gas pump. Um, and that's really hurting the people that are wage earners that are lower income or even median income. A lot of people are getting hurt by that. However, people that have a ton of money, investors, equity owners, asset owners, are all doing very well. As you can see, the markets are at all-time high. We have the Dow at all-time highs, NQ at all-time highs. So people that own these stocks, they're not feeling the inflation and the hurt on economy as much because their portfolios are doing better than ever. So they have more cash than ever. So that's kind of where the K-shaped economy comes from. And I guess what it is, hopefully that's a good job of explaining it. But now I want to go in and kind of explain what this effect has had on the Jupiter real estate market. So just to explain, we've had record-breaking sales here in Jupiter. As you can see, the wealthy are not being really affected by this downturn in the economy, the increase in inflation. We've had a $48 million sale in Bears Club, one of the most renowned clubs in all of Jupiter. Another $41 million sale, which is the second highest recent sale. So, and then a $34 million sale in Admirals Cove, which is a nice waterfront golf community here in Jupiter as well. So, right now, while the average consumer is hurting and struggling to pay the bills, we're here in Jupiter and the wealthy are out breaking records and paying more for homes than we've ever seen. So to say that the market is hurting would be far from the truth. And I think that the wealthy are just a little more selective in their assets. They know that when they're buying these unique trophy properties, that there's just a limited supply of them. So naturally, with the markets being at an all-time high and the limited supply of these kind of properties, they're going to sell and the prices are just going to keep going up. So they're using this time to take advantage of the current prices, knowing that the prices are probably only going to go up in the future, especially for these scarce assets. So let's take a look at the data for real estate numbers here in Jupiter. For anyone with a median priced home, so let's call it 500K to $1 million here in Jupiter, the market's been relatively flat over the last couple years. In some cases, even down a couple percent. As for condos, they're down tens of 15s of 20% in some communities where these special assessments have gone outrageous and they've had some of these structural issues with the buildings. But like I said, the luxury market's outbreaking records and at all-time highs. So it really depends where you're looking, and then for someone to describe the whole real estate market in one grouped answer and trying to tell you where it went or where it's been going for 2026 is just an incorrect answer because it really depends where you're looking, what price value you're looking, and the type of property that you're looking at. Why is this split happening? I feel like I've talked about it a little bit before, when I was describing the K-shaped economy. But the split's just happening because the market's at all-time highs. People that are invested that own these equities and own these assets are feeling wealthier than ever. People that don't own as many assets that are stuck paying bill to bill, they're going to feel the increase in grocery bills, the increase at the gas pump. Their wages have not kept up with the increase in these supplies and these commodities that they're buying. So, yeah, it's going to hurt. On top of that, you have most of them doing financing. Interest rates are higher than they were a few years ago. So their monthly payment's a lot higher. Their insurance is a lot higher. The HOA fees have climbed a ton. It's not easy by any means to buy a house. However, the wealthy who are paying cash, they're not as affected by the interest rate increases. Like I said, they own equities, so their portfolios are performing well. They're buying these scarce properties where there's not many. So when one comes up in a good location at a price point that they're looking for, they're going to jump on it. And that's why the prices have just remained strong for these scarce, higher priced assets, while homes where there's tons of options, they're going to sit a little longer. The buyers are going to take their time because they're a little more difficult to afford. And if that house goes under contract, there's more than likely another one that's going to be very similar coming on the market within the next couple of months. So that's also affecting the prices. Obviously, if the demand's not as quick and not as strong, a little more laid back, then the pricing's going to come down with that. So what does this mean for sellers? Sellers in the waterfront communities, club communities, these golf course communities, trophy estate communities like the Bears Club, Admirals Cove, the ones that we were talking about earlier in these slides, they're in a very great position, honestly. If especially if your house is already remodeled, you're getting these turnkey luxury buyers coming in from New York and California who just want a house that's ready to go, where there's not going to be any issues, there's not going to be any upkeep, any work. It's turnkey, ready to move into, ready for their family to enjoy. Otherwise, for the average properties here in Jupiter, the single families, the condos, they're going to have to price realistically. You can't be trying to break records in this market. And don't get me wrong, I don't want to come off that the market's soft for these $1 million homes, these 700, $800,000 homes. The market's still strong and the buyers are still bouncing quickly. They're still acting quickly when they see a deal out there. I think they're just a little more wiser. They're taking their time. They're actually running comps before they make an offer. And they're taking months to decide rather than a couple weeks because these homes are not affordable for most people. So they're going to want to make sure that they're making the right decision. So you really can't blame them, but the sellers just need to price appropriately. And when you do, your home's going to fly off the shelf, especially if you have a good product. What does this mean for buyers? Let's address the luxury buyers first. So for luxury buyers, the supply is scarce. So when you see something coming on the market, you need to act quickly, especially if it's priced appropriately. If you take your time, that asset's going to be gone. There's going to be someone paying cash, slow inspection date, very quick close, and you're going to miss out on the opportunity. There's only so many homes, especially on the water here in Jupiter, and when one comes up in the location at an appropriate price, they're going really fast. So I would just say know exactly what you want, work with an agent who knows what they're doing, knows the market. It's going to help you move quickly on the right home. Are you buying on a median priced home? I guess kind of goes the same. You can take your time a little bit more, but like I said on the slide before, we're still seeing these fly off the shelf if they're priced appropriately. So that's where you go in. Yeah, you take your time. Don't jump at something or overpay for a house that you think you're going to miss out on because right now people aren't really overpaying for a house. So work with an agent that knows the values, know what a home is worth, and helps you make the right decision, tells you when to move quickly and when to maybe wait, sit back, wait for a price reduction, come in with a lower offer, make sure that you don't overpay, things of that nature. So yeah, just it really comes down to the agent expertise and the market segment that you're in. But yeah, there's two different strategies for two different price points right now. So yeah, just to highlight, this market is really two different markets right now. And for anyone trying to describe the market in one sentence, and really highlight the data and the market as a whole in Jupiter is really doing you a disservice and not appreciating the fact that we are in a K-shaped economy. The market's heading two different directions. The bottom part of the K for housing is relatively flat, while the upper side is out breaking records, setting new records, buying these scarce properties, and making moves because their portfolios are higher than ever. On the other hand, you have the flat market, the bottom half of the K where interest rates are higher. They're affecting their monthly payment. Insurance is very high, HOA is very high, property taxes are very high. And especially down here in South Florida, your insurance is a lot higher than in many other states. Even your car insurance is higher. So it's not a very super affordable place to live, but we're still flocking here in groves because of the demand and the beauty and all that Jupiter has to offer and South Florida has to offer. I think people just neglect the fact that the prices are high and they're high for a reason. It's because everyone wants to be here. But no, kind of what I was saying was there's two different markets, so make sure that you take into account which market you're shopping in, which market you're selling in, and work with an agent that knows the difference between the two markets, and that's going to help get you top dollar on the sell side and help you buy on the buy side and make sure that you don't overpay, that you move quickly when necessary and help you lock down the home before someone else does. Thanks. If you guys have any other questions on the K-shaped economy, feel free to write it in the comments or message me today. Otherwise, everyone have a great day and